Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, I'll go through the market update. We'll update the earnings trades that are ongoing. And then we got a special treat. Lee is going to be presenting a strategy that basically he researched and has been testing on the platform. So I think that'll be, I think you guys will want to take a look at that. Seems really good to me. Joe's out today, so it's just me and Lee's filling in for Joe. So let's get started. All right. So market overview, look here. You can see SPX in 5. Russell did pop into state 1. So obviously that's usually a very bullish sign. You see a lot of the sector ETFs have been popping into, or at least some of them are in state 1 there, energy, financials, industrials, and that's basic materials. So a lot of things have been moving. We'll have to see if that's, we'll analyze that in the state modeling analysis. Overall green pie, we have shrunk from, near 52-week highs last week. We got up around 83 almost, and now we're down to 72. Not too much movement in the market overall, but it's a pretty decent drop. So you can see a lot of those are 7s to 5s. I mean 7s to 8s. So we'll look at that also. One other thing, the dollar did pop up from, it was an 8, so now it's in 7. So it's kind of overall. So let's take a look at overall bullish bearish here. So current states, you can see here, we pretty much, Joe did a really good analysis a couple of weeks back just on these numbers. So it was, really high historically, since 07. Up around 83. So now we're down 72. So we're getting some movement. We'll see if that continues. A lot of the time, you get kind of levels off and then dropping, so we'll see if it bounces back or kind of continues sliding. I've been watching these lows very closely. You can see here since the beginning of the year, let's pull up year to date. You can see, the red line, the lows have really just flatlined this period. So, that's another bullish sign overall. We did get a nice little spike here on the second, 285 for new highs. That was pretty much high of the market. So, not getting a ton. Previously you'd get a lot of big spikes here on the highs, but not so much here. So showing a little promise, definitely not out of the woods by any stretch of imagination. These, the 200-day SMAs are kind of flatlining. We had to peak right around the same time as the market top, and just kind of meandering along there. Let's look at the state 1s and 8s here. All right, 1s and 8s. So if we put out to like a year, see the 1s have still, kind of strange. The 1s have still kind of been climbing, even with the dips here. So you can see, like last week we're right around here around 10%. So 8s bumped up a bunch, about 5%, and pretty much flat on the state 1s. So they didn't really drop out of the state 1s, which is pretty good bullish sign. If we get to state 1s over 45%, that's where we get our overbought condition. So it's right below there. Once again, we'll have to see. If we throw in our 7s and our 5s, You can see the sevens have really tanked, and fives have started turning over too. So we got, from the bottom here, we got great transition. So a lot of the strong stocks are still holding, but we got 7 and 5 kind of turning over. So we'll have to keep our eyes on things, but eight's popping. If that continues, obviously it's going to be it's going to lead to spikes and lows, and because when we got things in state 8, you can see here January's pretty much beginning of the year, the eights came way down, so pretty much all the the new lows pretty much disappeared at the beginning of the year. So we start getting these climbing up, then we could see new low spikes when things get into state 8. So okay, so that's the market pulse. So SPX still in 5. We said it's, pull up my annotation tool here. So, that 41 was a big level. So that's kind of, if you look here, when it popped above, started to get support, broke below and came right back above. So, that's definitely acting as support right now. Our big range for SPX is 42 to 3,800. So that's our big range. 42 is becoming a problem. But that 41 definitely showed some good signs here. That's what you look for in bullish formations, is that target 3 basically, when it gets above, it starts showing support. So that is definitely a bullish sign overall. So next step would be breaking above that 42 and getting into the higher range. The next range above is 4,600 to 4,200. So that's kind of where we're at here. Still haven't transitioned to 1 as far as SPX. I think if that goes to 1, then definitely very, very bullish. So we can pull up, there's our 42. So you can see right here, we got 4195.44, and since then it hadn't really got close to that 4,200. Let's see how far I can pull this out. Yeah. So we had a false breakout back here, and we talked about that a lot back in August, where it got a couple days above and then turned around and then retested that 4,200. Let me annotate here. So, retested, and then that was, failed here. So you had to false breakout. That's a 200. That was a resistance then, came back down. Let me annotate the 42. So from there, we dropped below, came back up. This was the kind of critical point here where it failed. Since then, we haven't got back there until now. So, the 38 is the bottom here. So we did have a few breaks below, but the last time showed really strong support back here, December, beginning of January. So you had that one kind of false breakout here. A little bit more than a false breakout. It spent some time down there. With the ultimate low being right here. But this was definitely a false breakout. Russell did the same thing, same time frame. So our current range still stands though until we break out of that 4,200. So it's going to be tough resistance, just like 41 was. But we do have very strong support down there at 3,800. So it would take a lot to break below that. And we're pretty far off that right now. So big picture wise, almost same thing as last week, right? Look for Sorry, pulling up the tool. So this is your key support, and this is your key resistance. So, if we can break above 4,200, then I pretty much guarantee we'll go into one from here. But, we have to see, if 41 continues to hold. And, the longer it holds, the more bullish you should get, about getting above 4,200. Get above there, should be very bullish overall for the markets. So let's peek into the Russell, which did, we say this typically leads, typically, not always, but so this one went into one. It's the only index, major index that's in state one. The last time we were here is a long time ago. So the last state one for Russell was back there, October 2021. So that was, this was that false breakout above that trading range that I don't know if you guys remember this, I do, but we had this really long trading range, and we had a false breakout, and then things just kind of got bad from there. So one, we talk all the time about typical patterns. So we like to see it kind of start in a typical pattern, which would be getting up into the 1-2 range, coming down, testing the entry price support, and then kind of making a run up to the average move. From there, it's about 20-30% get above, and the rest of the time it usually comes back down. So I just kind of watch, if this thing starts playing out, getting up, obviously, it's going to be bullish. That would mean SPX is probably going to follow. If we get this kind of sideways, where this isn't really, this kind of becomes like a resistance point, that entry, and it's obviously not going to be bullish for the market overall. So we kind of want to see this thing start creeping up, getting up into this level. But we'll have to wait and see. It's got quite a bit of days available to do that. 37 trading days, so it's almost 2 months. So we're only 2 days in. Overall, like kind of key numbers here, that 1900. Obviously critical. This is our trading range now, 21 to 19. 19 has held, since this breakout. So got kind of close. Didn't really, would like to see it get lower, closer than 19 on that, but still showing, as a critical level. So, as long as that holds, it's still bullish for the market. Next level 2100, so that's above, right above T3, the third target. So quite a ways off of that, but things can move fast. So all right, overall, and I'll just pull out levels just kind of quickly. All right, so that's our 19, which was a great level for us, all those resistance levels. So the bottom there is 17, which is held really well. So this would be the next leg up, that 21. So this is our current range, 19 to 21. So we got up to right around 2000. So back here, this was that false breakout. I'd kind of look at that level also. Getting above that, I think would be very bullish for the market. But let's see what those levels were. 2020, about 2030 was the high. So here we got 2010. So getting above those, I think that false breakout would be good. Let me clear this real quick. All right, we pull it back further. I need that 21 on there. That's not cooperating. So that's the top here. I just kind of wanted to pull back and show you. You know, this was that 21. So that's the top of our current level. You can see back here, you know, this was a Fed day. I remember, you know, broke out strong, and then next day just, you know, real bad from there. But this was a Fed day here. So, you know, haven't been back in that range since then. So, you know, getting up there is going to be, you know, tough, but really, I think the next level is going to be that 2030, getting above, you know, this level back here where we had the false breakout. You know, and that ran into 200-day resistance there. So we're above, you know, 50, we're above 200. You know, they both have crossed. So, you know, we just have to see if we get continuation here, or, you know, we just want to make sure it's not a false breakout, which is, you know, been known to happen from time to time. So, you know, we want to see SPX follow into one, and, you know, kind of, I think SPX is more the focus right now. You know, as long as Russell stays in one, you know, getting above 4,200 would be very big for markets overall. You know, as long as it stays in one. So, and then, you know, 1900s, your support, key support. You know, where are we at today? I think so. We're about 40 points off of that. You know, and we're 80 points away from 4,200. So, and, you know, we're kind of near 4,100, which, you know, has been, you know, kind of starting to act like support for SPX. So that'd be your first level to be watching. Okay, I think that was it. You know, did want to bring up 10-year. It's been going crazy. It's been very volatile, you know, since we've been starting to track this thing, but big moves as usual. You know, that 3.5, when it gets below 3.5, it just seems to like pop back up. You know, that's kind of like the line in the sand. You know, below 3.5 would be, you know, at least right now, like a buy. You know, like, you know, it's going to go higher from there if you get wells below there. So right now, you know, pretty big move. It's not cooperating. Yeah, we're like 3.3 something. Now we're up 3.8 in a very short order of time, you know, 2 weeks. So that's a big move for these kind of markets, and this isn't typical. I mean, that huge run up, you know, dip down, and that 3.5's pretty much line in the sand right now. So, you know, always keep your eye on that. It's going to be important to watch along with the dollar. I don't want to buy. So, you know, we've been watching that dollar, you know, basically from that high. You know, it's really helped stocks a lot, you know, that big drop. So, you know, went into 8, now we're back in 7. So if this starts transitioning, you know, moving up the ladder from 7 to 5 to 1, that's going to be bearish for stocks overall. So higher rates and like a stronger dollar, just not good for stocks overall. So those are kind of the key ones you can look at to help you with direction. Okay, Fed still looking like quarter, not much change here. Still about over a month out, so I won't really dive into that much. Balance sheet, you know, quickly flat from, you know, the week before, so no movement there. I did want to point out, you know, so this 210 inversion is 0.8, like it was like 0.82, which is really high. I don't know if I had one that went all the way back. There it is, 210 long term. Right, so we're back. Let's have a drawing tool in this one. There we go. I like that. Sorry. So we're like back in the same range as here right now. So, I mean, even these low, you can see the 210 inversion here. We were, you know, even back here, like the dot-com bubble, Great Recession, all of these, we didn't get down to this level. So this is before, I mean, we're even lower now. It's keep making like new lows. So this is like back in the 80s when we had, I was a kid then, but the more it inverts is not a good thing for all, which is saying, that's basically saying it's not going to be a, oh crap, soft landing. So sorry about that. I double clicked. Okay. Well, that cleared everything. That was probably the last one I wanted to show, but I'll open up to questions, comments now. Sorry about that misclick. Anyone got anything? Questions, comments?
Green pie has been falling for about a week.
Yeah. Yeah, market hadn't like moved that much, considering like the magnitude of the 10% is pretty big move, but
I think we've peaked out a little bit, in my opinion.
what's that?
I think we've peaked out, in my opinion.
Yeah. Yeah. I mean, it kind of feels like that. Everyone's, consensus is soft landing, so you should probably go opposite of that. Yeah. Yeah, it feels like it. The earnings, I don't know, if, I've seen some stuff on Twitter, but nothing I pulled, about earnings have been declining overall for the companies. Like the estimates keep, dropping. So, people are letting people go. I still don't understand that one jobs number, but maybe it's a seasonal thing. But, everyone's thinking soft landing, and I'm not thinking soft landing, but
Yeah, and with earnings not great, and the market going up, that means the valuations are pretty lofty. Pretty high.
right. Right. Yeah, I mean, especially they're very lofty if, the earnings keep kind of dropping.
And the yield curve, like you were showing, is almost at a record inversion, right?
Yeah,
So
definitely.
something's got to give.
Right. Yeah, and I'm always looking for signs. So this was another one that kind of popped out. I did find out this is like a survey that people pulled. I guess they have as far as like greed and caution, and basically they're saying, right now investors are showing signs of greed, and it's only really tripped kind of a couple of times here. I'm not sure the accuracy of the data, but I saw it, looked interesting. So I wanted to show that. And I did want to follow up. So today, remember I told you that Chat GPT prediction. So it's not looking like we got the crash, so as far as I see, nothing's crashing. So, and that was today. But I did read some more about this. Basically, they found a way around, all the programming so that it would basically, tell the truth or whatever, which is what's called Dan mode, it's been fixed since then, but it was just very interesting. But we can add them to the long list of calling for a market crash and being wrong. you know, so. But
Josh,
yeah.
This is Winslow. I thought
Hey,
that computer was really stupid when it came to math. So,
apparently it is, so.
Yeah. I wouldn't believe it.
No, I pulled up because I thought it was interesting, and it was only a week away. So I mean, it's not like it said,
Right.
2024 or something, like everyone will forget it. It's like in a week. So
Yeah.
so I didn't, he's got 2.5 hours left, but I don't see a crash coming today.
Yeah.
Yeah.
Okay.
So anyways, so we can close the books on that prediction. Okay, let me run through earnings real quick and then we'll get Lee going. So organizer virtual portfolio. Okay, bullish pre-runners. So I know we had at least one more closeout. No, two more. So we get two open right now. That Kohl's, EIG. So two are open. That's their earnings date. So I think this one will close. EIG's done today. It'll close out because earnings are tonight or after a close. So we'll only have one open. Looks like it's going to hold. We did have our first loser for bullish pre-runners. Like I said, that EXC, couldn't make the comeback. The price wasn't much, but just got eaten up. So that one was our first loser. Everything else so far has hit profit targets. Looks like EIG, unless it's really popping today, isn't gonna hit a profit target. So unless it's really popping, no. There's EIG. So it looks like it'll be a winner, but not 25. So and then we got one more left there, but overall really strong. I don't think we have much left in the way of pre-runners, so maybe one or two. Okay, bullish runners, we've had a few close out, so quite a few trades open. Up a pretty decent amount. Got three down decently. Not way off price wise, but oil's been hit recently. So they're down some. The price aren't really drastically lower on anything, but we'll have to see how these all hold out. But the rest of them, the 13 that have closed, all hit their, I believe they all hit their targets. So 26, 27, yep. So all 13 that have closed so far have hit their target. We got 8 open, overall strong. So next up, we got bearish runners. So 2 open trades. So they're both, up. This one's pretty close. I think it's Pinterest. Take Two Interactive. So they're both showing up. I think these are the only bearish runners we'll get. But still got some time on them. Hopefully they can hit their marks, and be nice to get those to be positive. I think we had 2 vol rise that have closed out. That's CH Greg. Barely pulled off the profit at the end, and then Disney did, pretty decent profit, 15. So those are looking good so far. I mean, earnings been pretty good. Non-mover. So we had a trade there. I think this one just pulled in. What is that symbol? Biogen, yeah. So we still got these two. They got to the end of the week here, the 17th. Now Stryker, this one this one really popped up higher. Oh, that's why we, these non-movers, we give them time. You can see this thing really got up high. So it's back in the zone, inside the top there, the 270. Obviously, we'd like it to get a little closer, but a lot better than where we were. So we got until Friday, get a profit on that one. Same thing with the LYB. That one. Just, right above the range there. Never really got profitable, but, as the time decays, and get a little drop, that's all we need. The closed positions. So you can see we're at pretty good money here so far. Where's that? Yeah, this is the one, NXPI. So this one worked beautifully. You could see, basically popped up well above, and then, we dropped down here the last day for a night, and it ended up being a profit. So that's what you need. It held on, it was showing profit here, like a little bit, so first day you could have got, depending on when, this is a snapshot of the day. So it closed at, 184, but at some point it was 178, so, you probably getting a lot higher profit, at some point during the day, but, this just shows that snapshot. So here, got ugly, started coming back, and that last day ended up coming up pretty strong here with a decent profit right on expiration. So that's good timing. And I think that's the only one that closed. That one closed previously. Yep. So that's it on the earnings. I mean, it's looking strong. So overall, I'm hoping for the bearish runners. No one roots for them, so I'm hoping they show, close out. And I don't think we have much else, and it's starting to wind down. We got a month until the next release. 3/15's the next earnings release, so we're getting towards the end here. I'll just pull up real quick, kind of see what we got left, and then we'll get Lee going here.
I think it's interesting when this thing populates with a lot of bullish pre-runners and bullish runners. That seems to be predictive of a short-term rise in the market.
Yeah. All right, so we got that one just pulled. So we got, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 trades left because this is the next earnings here, 320. So this is pretty much all we got left here. So we got one bullish pre-runner left, Franco Nevada, gold miner. Some runners. Here comes the bearish runners. Good Lord, we got 4 coming. Then one vol crush. So that's all that's left. All right. Any questions on earnings or anything in general before I get Lee going?
All right. You ready? Am I ready?
Are you ready?
Yes, I am.
All right. Let's go.
Let me get the screen here. Okay, can everybody see my screen? Says no?
No.
Oh, okay, hold on. There we go.
There we go.
We good? All right. Everybody, this is I was watching the news, business news. This lady comes on, she's a technical analyst. I've seen her before, and I think she's really sharp. What she says makes sense. So she was talking about McClellan Oscillator. I went and looked it up, read a lot about it, and came back into Delphian and implemented. And so what we're going through today is the trade itself and how the McClellan oscillator works. Okay. The McClellan oscillator, it identifies oversold conditions. Okay, so we're gonna try to pick up on the rise of a stock. I'm looking for, and this is my, as I go through and I look at these different dates and what the stock did the next day and the next, I'm looking for a 5% increase in the stock price. Now, this is a little different from what we do, but you have the option to make a bull put, some sort of vertical that you like. I used a long call, and these are the results that you'll see. As usual, I'm looking for a 25% profit. And usually I use a 30 delta. And I was going through the results with Josh, and Josh says, well, you might want to consider 40, 45 up to 60, 65. I did, and it made a substantial improvement in the profit that I took. Okay. So what is the McClellan oscillator double bottom? We're looking, there are different trades. We're looking at the double bottom. And so if you go, and I could only set it up in Thinkorswim. So that's what this screen is, the Thinkorswim. And we're looking at Microsoft, okay? This, okay, McClellan oscillator down here. I had to add this to the screen. This is what I interpreted as a double bottom. And as I looked at a lot of these, I also interpret this as a double bottom. And I think many of you use Thinkorswim. You know that when you put your mouse on this, it'll come right up, it'll show you the spot, and it'll tell you the date. So I would write down these dates. Now, see the red line is 0, or I'm sorry, the white line is 0. The red line is a negative 150. And for my purposes, it only seemed to work if I was below 150. Okay, so you need to be below 150. There's also an opposite trade where you're going down. Anyway.
Your settings show that that red line is negative 100.
On the top. That's right. On the bottom, if this wasn't in your way, this negative 96 data, you'd see a negative 150. Okay?
Okay.
All right. So what I'm saying is the double bottom comes in several forms. And you'll see that if you track through some of these. You want a negative 150. All right. So here are the results of the test. And I was using, because this one had the best profit factor, I was using this. And this is when Josh came in and said, hey, think about a delta of, say, 40 or 45. I did, and you can see it made a substantial difference. What is this? 16. So it's almost 50% greater. The profit factor is large, 16.58. I had a win percent of 94. And that 94 is based on 170 trades, which is a pretty good universe, at least for my testing, of pretty good number of trades to test on. And
what is your entry date manual, or is the McClellan oscillator in the Delphian indicators?
No, McClellan is not in Delphian. And I had to go back here and go back, and I only went to 2007, then started scanning and found each one of these, wrote the dates down, you know, and I have not chased these losses and rejections at all, because I was happy here and I was just moving. There are so many things to do. Also, the efficiency, I like this. It's very good. Okay. Now, I think some of you do this where you're running and then you change, let's say the delta, and you click on the trade rules here, and what you get is this screen. And you can see I was using a long call, 60 days minimum, and this is for the Microsoft. And here's my 45 delta, 25% profit, then 100% loss, and I'm out. Okay? Makes it very easy to go back and to test and retest and change some variable. We good? Okay. You mentioned entry dates and exit dates. This example that we're looking at, this test, it began in 3/10/2008, and it was identified by McClellan. So I wrote it down, right? And I identified all of the entry dates from 2008 through current date.
Mhm.
Yeah, it was a lot. It was 107, right at 107. And just like Josh has always taught us, that takes us through up markets, down markets, and flat markets. The point being, we want to see that the trade works in every kind of market or where it doesn't work. Now, we know 2008 was the great financial crisis, so that was a down market. And it was kind of down several times through 2008, 9, 10, 11, 15 had problems. 2018, the Fed raised rates 4 times. And at the end of 2018, the market really started a downtrend and Powell had to reverse himself. And then obviously COVID, right? So those are big down markets. And on the back side of those, each of those, we had good up markets. After COVID, we had the V-shaped recovery. And there are some flat markets in there. So we're testing in all kinds of markets. Well, I believe that this McClellan oscillator works on many stocks. It shows good results for other stocks. Now, I can't do them all, but I am hoping that you, good people, would be enthused and want to maybe identify your favorite stock, go through, look at the double bottoms, the dates, use the import file function of the back test to test your results, and then fine tune using delta, length of expiration, profit factor, and such. And then hopefully you share the results with the group, because I think we would all like to have a nice trade. Okay. If you use the file import function, and I use Excel, and it has to be set up this way with this wording, the entry date, which is found for us, the exit date, they use equal E date, A2, which is this date, plus 9 months. Now we get this date and this symbol. Okay.
Hey, Lee, real quick.
Sure.
We did that because if you leave a blank, it'll put in end date of, whatever yesterday. So it'd be 2/15/2020 or 2/14/2023. So the back test was super slow. So that's why we always want like an end exit date, within, like a year or something like that.
Absolutely. And when Josh says it was slow, it was murder. Okay. So that's if you want to use it. And then to find that, you know, you use your little wand, you say import, and you go say go. And then everything else you're familiar with. Okay, Katie Stockton is the technical analyst that I heard about this McClellan oscillator from. And this is her company. You can look it up online. You can go back and see her presentations when she was on MSNBC or Fox or whatever. And she mentioned it very briefly. It was just a word. So I went out and I Googled it because Katie makes sense to me. She's not that usual high energy. She's kind of, flat's not the right word, but she's very calm. And she just makes sense. So I went out to the McClellan oscillator, McClellan website. I went through their whole website. I looked at this, I bought it, $10, and read it. And I want to tell you it's dry, and it is dry. So the reading it, tests so I'm hoping that somehow this seems interesting to the good people on this call and that you'll actually give it a try. Josh, I put a link to this presentation out on the chat, but you know, when I sign off, I don't think the link to it's going to be good. I sent you an email with this presentation.
Yeah.
If anybody's interested and would like to reference it later. So
Yeah, in the when I send out the replay, I'll attach that for people.
okay, good.
Thank you.
Okay, and that's kind of my presentation. Anybody got any questions?
Yeah, I have a question. It's not clear to me how you're defining the double bottom.
Okay.
Is it within a certain, does it bottom within a certain number of days, and it can't go above the red line, or how did you exactly define this double bottom?
Okay. I didn't pick that up from the reading. I just went through and I said, oh, okay, this is a double bottom. And here's one, here's two. And also as I went along, I said, there's one, there's two. And there are other variations. And you have to just look at this and you go up and you find the stock price, right? Somewhere like around there. And then I'm looking for a 5% gain. And it's right in here someplace in stock price. Now, you just have to, if it goes above the red line, I get a little cautious, like here, you know, and then this is a single bottom. What? So you're going to have to eyeball it and figure it, and maybe you put some in to your test, and then you look at the results and say, oh, that does work, or oh no, that doesn't work.
So Lee, it's not like so it may be different levels for different stocks. So this one was minus 150, right? That's
Right.
kind of like, you know, like at least the first trigger. Then you're looking for like you know, it does it twice. But, you know, I think another stock, it may be like a minus 100 or something. Right.
Yeah, but yeah, let me see if I can bring that up real fast.
Like I'm sure that SPY would be different.
One moment, please. Oh. Yeah, let me trying to share a different screen. And
There
can
we
you
go.
see it now?
Yep, coming in.
Okay. So you get some that look like this. You want the SPY? Is that what you want?
Oh, whatever. Yeah, sure.
Okay. You can see where I made some notations out here. So this is, well, it is the minus 100,
Mhm.
but you stick it here and it's a minus 323. I'm still looking for the minus 150. That's a 200. Okay. So I was wrong about the line is labeled,
Mhm.
but it's still a minus 250. Where do you want to look? Okay, here. And it gets more difficult to see it here.
Yeah, it's better zoomed out a little more.
Yeah.
So like this here, back here, like 8, yeah, there, that would be like your double bottom, right?
That's what I'm thinking.
So then you get
And
it
you can
quick.
see it
quick-
up here.
Go ahead.
So
You can-
it looks to me like your double bottom, just eyeballing needs to come within, let's just say 5 trading days at the worst. It's coming really, 2, 3 trading days apart,
Mhm.
and all below. If you're using a threshold of 150, am I defining that correctly?
Yeah, pretty much. You're on. I think there's a correlation between the double bottom happening, and let's use your example, with happening within 5 days.
Because you're
I think
not
that-
considering where you have the red circle bottom 1 and see the valley at 926. You're not considering that bottom 2.
No,
You're considering the double bottom all within what's falling around 9.5.
yeah,
That's right, right here.
And so
And
that's
you,
why I'm trying to define it, because, other people may look at it and say, okay, bottom 1 was on 9.5 and bottom 2 is 926.
well, and this is where I think going through and testing them, and now look at it, see this, and so the bottom is at 390 and it's going to go up to 410. That's a pretty good rise. It's 15. That's not that'd be 39.50. That's not 5%. Okay.
But is
And then
your entry after the second bottom, the next trading day, or is it after the second bottom and a 5% rise the next trading day?
No, not a 5% rise. It's back in, just for illustration, let's say this is the second day, the second bottom.
Right.
So I would take it there or first thing in the morning and then write it up.
Yeah, on a daily, your only choice is to wait for the candle to end, and then you've got the bottom. You can enter at the open of the next day. Right?
Yeah, or you take it the very last, at the very end of this day or the very beginning of this day, whatever you like.
Right. Okay.
So, and you just scroll through and find all of those, write them down, put them in a file, run it. But you can see it happens, this double bottom thing it's happening with some frequency.
right.
You see this first occurrence right here. You see where the candlestick is, but if you go to the second one, now the candlestick is significantly lower. And then you can see the pattern is it starts to rise. It's oversold, and then it gets to overbought. I guess if these are Keltner channels, I like them, but anyway. And it's the same thing again. You can see this pattern is happening and happening and happening. Now there's something to do with a single bottom, but I haven't figured it out yet. Of Questions? Thoughts?
Interesting. I'll have to take a look at it.
Yeah,
Yeah, I'd concur with that. I'm unfamiliar with this indicator, but definitely opened my eyes. I think it's worth taking a look at and maybe even try and get into Delphian down the road here. Seems
You know-
pretty useful. I'm gonna look up, see how the mechanics, how it works,
yeah. What the oscillator does, and these are just general terms, it smooths out the price pattern. It's smoothing that out, and then you have your highs and lows, and then once you get above 150, it seems like it's a good place to enter a trade.
You mean below, yeah.
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 Below. Now, I'll tell you what, it's also opened my eyes to, if I hear that somebody else has a good trade, but it's not, I can't do it in Delphian. Delphian allows, just like this, to collect the data, the dates, entry dates, exit dates, and then test if it works or not. I mean, this is really powerful stuff. If you hear other people that have great trades, they have a pattern. It can't be just, oh yeah, well today, it can't be that, but it has to be a regimented pattern process. So, all right.
Yeah, I mean, it looks, is there a way you can like create alerts for this on this platform? Like, is there some kind of rules you can like look for that? Or do you know? Because I mean, we always try and automate it, take
Yeah.
subjectivity out of it. That's, I think, would be the next step with this,
I'll take that on and research it and then give you a report next week.
Okay. Sounds good.
Lee, have you
Yes.
noticed any particular candle pattern? And it seems like it's a red, green, red, then it goes to green, green. As far as what I see.
Russell, I'm not looking at that at all. I'm focused on the McClellan and when it tells me to go. Because that's what I did. That's when I entered the trade. I'm not looking at the candles, and I've got a 94% win rate, and I'm happy with that as an indicator.
Yeah, that's a good point, Russ. I mean, if there is a distinct pattern, like, okay, we got a double bottom and we got like red, green, red, if there's more like confirmation, I mean, it does kind of look like it's something like that, right?
It does. It does. It was a good observation.
Yeah.
Yeah, and also if it's like below a certain line as well, like if it's below 150 and you get this situation or something, I don't know. Well,
to your point, it's very good. I think when it gets below this Keltner channel, well, I'm starting to think it's got to go up if it's below the Keltner channel, right?
Right.
You laugh, Josh.
No, I believe in Keltners. Trust me. A lot of our strategies are Keltners. Like, it's a great indicator.
Yeah. So we've got another confirmation right here on the second one, or this second bottom. And okay, Keltner's saying it. McClellan is saying it. And look here. I mean, we can see it works.
Right.
I'll be curious if any of them matched up to his high probabilities for that particular day for that.
Oh, that's SPY. It'd have to be a regular symbol.
Oh, okay.
Yeah. I don't have it for the ETFs yet. One day we'll get the ETFs in there.
All right.
Yeah.
If anybody has questions, you can shoot me a text or call. I don't answer phone calls unless I recognize the number, but you can leave a message.
Well, Lee, we really appreciate it. I think it was a great presentation. Open our eyes. We're always looking for, useful indicators. So that was thanks for, sharing your knowledge that you've obviously spent a lot of time with this, so we appreciate it.
You're welcome. Thank you very, very much.
Okay, well, I think that's it. Does anyone have any questions for me before we close it up? No? Okay, well, thank you all. We'll do it again next week.
Thank you.
Thanks.